Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hey, what's going on YouTube? This is Calvin Russell here, CEO and founder 850 Club Credit Consultation. Hope everyone is doing well today. Listen, I most definitely want to go into one of the top questions I've always gotten when people are looking for a vehicle, and that's, do you need a down payment? Okay, now everyone's situation is going to be a little bit different. Again, but the thing about it is that when you're looking to go into a dealership, you want to make sure that you have a few things in place, especially if you're looking to see if you need a down payment. Okay, so the number one way that, well, I would say the number one reason that you should know you need a down payment is if you have a credit score that's usually under, I would say, about 620. Okay, that doesn't mean that you cannot get approved. Without a down payment. Is just that the chances are a little bit higher. I would say 80 to 85% chance if your score is under 620, under 600, that you will need a down payment. Mainly because the banks need some type of skin in the game, so they know that you're going to actually, pay the bills on time and things of that sort. Again, everyone's situation is going to be a little bit different. For example, if you're a 590 or 600 or 620, and in the last 3 years you paid your car note on time, you've never been late, you never missed a payment, then again you may not need a down payment. But at the same time, if you're under 620, under 600, 590, somewhere in that range, um, uh, it all depends on what made you get your score that low. Okay, if you've had late payments, if you've missed a payment, if you had previous repossessions, you know for a fact you're probably going to need a down payment. Okay, so that's number one, because of your credit score. Number two, the number two way that I've seen them, I would say the second reason as to why I've seen a lot of people need a down payment is mainly because they're trying to trade in a vehicle, but they don't have enough equity to carry over. For example, if your credit score is, let's say, I don't know, let's say a 650, okay? It could be a 700 as well too. In this case, the credit score does play a role, but not so much, not as big of a role as it would just without having a trade-in. A trade-in is going to be the biggest factor. For example, if your trade-in is worth 10,000 and you owe 15, so again, if it's worth 10 but you owe 15,000, then you're going to have negative equity of $5,000. Now, if you're going to a brand new vehicle, you can carry that negative equity over, but not all of it. Okay, every lender is going to have a different structure depending on where your score is and how much negative equity you can carry over. But on average, I've seen if you're like a 720, you probably can get away with carrying over 5,000. Now, here's a couple things you got to remember. For every thousand you carry over, on average in the United States, is going to average to anywhere between about $15 to $20 a month. Let's just say worst case scenario, $20 a month. So if you're carrying over 5,000, 1,000 equals 20, 20 times 5, that means you're going to be looking at $100 a month payment higher because you're carrying over that negative equity. Now, when you go into a new vehicle, now watch where I'm going. When you go into a new vehicle, some new vehicles, not all, some new vehicles have rebates, okay? And those rebates can be applied towards your negative equity. For example, if a car has $1,500 rebate and your negative equity is 5,000, now you're carrying over 3,500. So that'll be 1,000, 1,000, 1,000, and then of course 500. So we're looking at 20, 20, 20, 10. So we're looking at only carrying over about $70 a month, in addition to what your normal monthly payment would be on that car had you not had the trade-in. Hope I'm not losing any of you. So either way, what can also bring that number down is if, of course, you bring some money to the table, okay? Depending on your credit score, like say, for example, that's a 720 type of situation. So in that same scenario, if you get that rebate and you have $5,000 worth of negative equity, now we have $3,500 that we're carrying over. If your score is not at that point, or let's say it's like a 600 or 620, 9 times out of 10, they're not going to let you carry over that negative equity. Again, every lender is different, every manufacturer is different, but it's just safe to understand the worst case scenario. So in that type of situation, they may let you carry over 1,500, maybe 2 grand. So you may have to come to the table with about 1,500 to $1,000 down. Okay, so that's the number two reason as to why people need money down, is because they have negative equity. The third reason why you need money down is simply because you want to you're trying to get a certain type of monthly payment. Okay, it's nothing wrong with that. Sometimes we come from a car where we were paying $250 a month. Now we want a newer car, bigger car. Now it's going to put us at $400 a month. So for every $1,000 you put down, it's going to put you at about $20 less. You got it. So that means that if the car is already at $400 a month, you want to be at $250. If you put $5,000 down, then your payment's only going to be around $300 a month. Okay, that's on average in the United States. Every lender's different, every manufacturer's different, but that's on average from what I've seen. Okay, so that's why some people feel like, well, money down doesn't do a lot to it. Well, that's because you're looking at thousands of dollars divided into, depending on what state you're in, but most people usually do 5 to 6 year month terms. I'm sorry, 5 to 6 year terms. So 5 years would be 60 months. 6 years would be 72 months. Okay, and then if you're in like Arizona, I believe also. I think in Virginia as well too. There's a lot of other places. In Illinois, we do it too. 84 months, but there's a minimum amount of finance. Your score got to be at a certain point. There's a lot of ramifications. Some of you guys are like, there's no way I'm going 7 years on a car. You'd be surprised when you're looking at a 60, 70, $80,000 truck. That payment becomes very attractive. Okay, so or a car, doesn't necessarily have to be a truck, but either way. So those are the three reasons. Number one is because your credit score. It could be so low, or you have certain types of history where you're going to need that down payment. Okay. Number two is if you have negative equity, and of course, you may have to do it that way. And then of course, number three, if you're trying to accomplish, a certain type of payment range. Okay. Then of course you got number four, where the bank just simply says, hey, listen, based on your situation, you most definitely have to do no down payment, because sometimes people have like a previous bankruptcy, or they're in a bankruptcy. Some people don't know that. I have two videos on that: how to buy a car in a chapter 7 or a chapter 13 currently, like you're in the bankruptcy, how to buy a vehicle doing that. Also, how to buy a vehicle after a chapter 13 or chapter 7. But of course, when you're doing that, anytime you bring up bankruptcy, there's about a 95% chance you will need a down payment. Now, how much of a down payment will you guys need? Again, that's going to be up to you. Okay. Usually, the higher the interest rate, the lower the impact per month that down payment is going to have. Again, the higher the interest rate, the lower the impact per month that down payment is going to have. Okay, so if you're looking at a 23% interest rate, $1,000 is not going to do $15 to $20. We're talking maybe $11 to $14, somewhere in that range. So you can always kind of play with the numbers. I'm going to do a video on how to calculate an auto loan payment pretty soon. I'll probably do it tomorrow morning if I feel like it. So, but thank you guys so much. As always, if you like this video, like it. You want to share it. And of course, if you're looking for great content coming up, just like I always do, be sure to subscribe as well too. Thank you so much. Talk to you guys soon.